Greetings and welcome to the latest installment of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like the formerly golden state of California to a more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, we are reviewing a recent report by Kristen Altus, writing for Fox Business, entitled California Loses Fortune 500 Crown to Texas as Billionaire Tax Threat Looms, referring, of course, to Proposition 40, which is on the ballot this November in California, and if passed, and it likely will pass, imposes a global wealth tax on certain California residents. The writing is on the wall. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, onward. For the first time, the state of Texas has more Fortune 500 headquarters than California. The 2026 Fortune 500 list shows Texas leading 57 to 56. 2 years ago, California held the lead. The reversal is not a statistical fluctuation. It is not noise in the data. It is the data. It is the result of specific companies making specific, well-informed, and timely decisions to evacuate California and move to the Lone Star State. Governor Greg Abbott's response was 4 words: the undisputed headquarters of headquarters. In the past year alone, ExxonMobil, Chevron, Samsung Electronics, SpaceX, Dell Technologies, and X, to name just a few, either moved their headquarters or their legal state of incorporation to Texas, and many of them came from California. A few came from New Jersey as well. Others came from Delaware. Texas corporations on the Fortune 500 list generated almost $3 trillion with a T dollars in revenue. California corporations generated less at about $2.7 trillion. Texas now leads on count and on revenue, and the gap will continue to widen because the conditions that produced it have not changed. Rather, they have intensified. The billionaires are following their companies, not surprisingly. The Uber co-founder revealed his move to Austin. Very interesting timing on that announcement as well. Elon Musk relocated to Texas years ago. Mark Cuban is in Texas. Palantir co-founder Joe Lonsdale moved to Texas. David Sachs moved to Texas. You get the idea. The Texas Realtors chair described the pattern. Americans are voting with their feet, and this migration is turning into a long-term shift. Now, as I've covered in innumerable earlier presentations on this podcast, the California wealth tax is on the November ballot. The Service Employees International Union collected over 1.55 million signatures, nearly double the 875,000 required. The tax would impose a one-time 5% levy on the net worth of California residents worldwide with assets exceeding $1 billion. It would apply to anyone who was a California resident on January 1st, 2026, which is to say a resident with $20 billion in net worth would owe a one-time tax of $1 billion. Opponents, who, by the way, include Gavin Newsom and Planned Parenthood and even the state teachers union, have warned the measure could eliminate an estimated 108,000 high paying jobs over the next 20 years. If anything, that number, in my view, is well understated. The co author of the ballot measure has admitted on camera, on the record, that it will not be a one time tax. A sitting Congressman, Ro Khanna from California, has stated that in his view, the threshold should drop to 50 million. Well, where is it going to stop? The federal version of the proposal, championed by Senator Elizabeth Warren, includes a 14%, not 14, 40% exit tax on net worth above $50 million. As I said, the writing is on the wall. Now, California ranks in position number 48 on the Tax Foundation's most recent state tax competitiveness index survey, as I covered in an earlier edition. Its top individual income tax rate is 13.3%, actually 14.4% when you calculate it correctly. Its corporate income tax rate is nearly 10%. Its state base sales tax rate of 7.25% is the highest in the country. Meanwhile, Texas, in contrast, imposes no individual income tax and no corporate income tax for most businesses. Texas ranks in position number 7 on that same state tax competitiveness index. Now, the Fortune 500 count is a lagging indicator. It measures where companies are domiciled today. The leading indicator is where they are going. The companies that moved to Texas in the past year did not move because of what Texas was doing. They moved because of what California and New Jersey and Delaware and New York and Illinois, the list goes on, were doing. The next wave will be even larger because the California wealth tax was not on the ballot last year. It is on the ballot now. With this context in mind, redomestication is the lesser known legal process of transferring a company's legal state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income taxes, but only when performed with the strict formalities required under the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When executed correctly by a competent professional, and that's an important caveat, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. That is to say, there is zero operational or financial disruption. I have successfully completed redomestications from all 50 states, yes, including California, and for limited liability companies, partnerships, subchapter S entities, and subchapter C corporations. Now, there is this myth floating around on Reddit and even still on Claude and GPT as of today that California does not allow redomestication. That is flat out wrong. California has allowed redomestications of LLCs for several years now, and for corporations since January 1, 2023. So if your CPA or attorney is telling you, oh, well, that would be nice, except California doesn't allow it, they are way, way behind the curve. Now, foreign entity registration is not the same thing as redomestication, because foreign entity registration, also referred to as foreign qualification among myriad other confusing terms, does not change the company's domicile. It does the opposite by keeping the entity in the former state, California in our example, indefinitely, and merely adding a second layer of compliance and tax obligations in the destination state. Meanwhile, a traditional merger, which is also not the same thing as redomestication, creates a new distinct entity in the destination state, may require the issuance of a new federal employer identification number, and can trigger serious tax complexities. Finally, dissolution should not enter the conversation at all, because dissolution terminates the company. It is the legal equivalent of administering the death penalty to your corporation or LLC. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event, and when performed inadvisedly, can expose the owners of the company to unlimited personal, emphasis on the word personal, joint and several liability for the company's liabilities, known and unknown, because that so called veil of protection no longer exists. So, if you have a so called professional suggesting dissolution as a relocation mechanism, please seek better advice. Redomestication, when paired with a change of personal residency and that is a very important a reduction or outright cessation of business operations in California, can reduce or even eliminate state tax exposure there for the entity and its owners. Don't take my word for it, ask your CPA. Now is the time to consider acting before the California State House in Sacramento considers changes to the law to hinder or even eliminate the option of redomestication. If you have questions regarding redomesticating your existing LLC or corporation out of California or out of another state, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information informative. As always, the information in this presentation, like all of my presentations, is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations, and there's quite a few on this topic, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.